Hey traders, Raghee here. Let's get a quick audio and video check in. I think we should be good to go. All right, there we are. Hey there, Facebook. And there's a reason we have all these Alex Hanold pictures up. We're going to talk about that here today. All right, so happy Thursday, everybody. Great to see everyone. Good morning, good morning. All right, so what got me thinking about Mr. Alex Hanold? You guys might remember he's the guy that climbed that El Capitan wild documentary, really cool documentary that I think Nat Geo did. And I got to thinking about Mr. Alex Hanold and how the markets move higher and lower, especially when we're thinking about volume. Because one thing we talk about in this room, we talk about it when we're setting up trades, and that is looking at these sort of ledges and these footholds, these little grips that the market climbs up and down through. And if you've ever watched if you watched the documentary, when he was preparing for the climb, if you missed what happened, he didn't just kind of grab it with the other hand, he slipped down quite a ways. And we know that's kind of the way the markets often work. Gravity does apply. So if you think about price action as Alex, and you think about these volume levels as the side of the mountain, as the side of the cliff, all of a sudden, the way in which things move tend to make a little bit more sense. So I've been thinking a lot about that. And I don't know, maybe that'll be an upcoming issue of Countdown Trader, that psychology. But yeah, it's something I was thinking about this morning. Thought I'd share it with you guys. What do we got today? We got the Jocko Get After It mug full of some Costa Rican peaberry this morning. A little bit more of a darkish roast, but super tasty. Okay, so let's get to it. Great to see everyone. Happy Thursday. Yes, good morning, good morning. All right, first question. Hey there, Vish. Good morning. SLV moved up a bit. Yeah, it sure did. We talked about SLV in the free video last week, and it was very much a potential technical bounce. When I say a technical bounce, I mean there was some support or volume and things of that nature in play. And if you're not checking out those free videos, every night, Simpler Futures free videos go out on the Simpler Trading YouTube channel, and they go out via the email that we send out to members and non-members alike, Simpler Insights. And then a lot of those topics, by the way, I'll deep dive at some point, usually before these free videos over at Countdown. And one of the things we've been talking about is this reflation environment. Reflation is going to benefit silver more than gold, 100%. It's going to benefit copper and platinum more than silver. Nonetheless, this is a choppy market. It's a market that I'm looking at, clearly moving higher, but it's not going to move like a trend. All right. It's not going to move like a trend. So is my buy zone any different? It actually is not, Vish. My buy zone in silver remains actually the same one that we had talked about in the free video. And that is using, let me show you here. That's using zones like this. All right. So right back to Alex, right back up to climbing the mountain. And that's clearly a level from which we have a good foothold here. And I really want to see this market get above this level here, where you can see at the moment it's upside resistance. We want to see it, again, get above that level as well. That's a VWAP, by the way. That's a VWAP anchored to the 1st of February. It's a VWAP anchored to the 1st of February. And so, and all those these kind of bluish VWAPs, those are anchored to dates. This pink one, This pink one is the one that I'll use to move around to recent highs, lows, volume events, gaps, etc. So that's what I'd say is some overhead. The next grip, but just like we know what was once resistance becomes support. Once I can get through that overhead resistance, once I'm pulling myself up, at some point I can stand on that level and then I can move up again. And that's how the markets work, gang. Alex. All right. Next up. Good morning, my friend James Harris. Today is what you would call a true gap day, correct? So now it's nothing I call it. I think it's just called a true gap. And I call it a dual confirmation gap to be a little bit more specific about what the criteria are for a gap that I think is more likely to be faded. So as much as we're seeing strength on the open, we may see a little bit of weakness after the bell rings. And that's going to be those momentum players that typically will fade this exaggerated open. Why is it exaggerated? Clearly it's above the close for the previous session, which is reason number 417 that we've been saying, don't ditch the bullish bias. And even worse, don't start thinking about how you can short this market. Be patient, be flat. I was just on the phone with my partner here in the office, and we were talking about, what do you do during those bumps? She goes, Rog, there is a tactic. She's been listening to me trade, for over 7 years. She goes, there is a tactic you use. There's a shift that you make when the markets start to bump. You start to shift your watch list. You start to shift your approach, not necessarily get short, but you get opportunistic elsewhere. And that's so true. So during these bumps, we didn't go bearish, not at all. I don't hate my money. And up in here, I'm not going to go bearish either, because there's going to be a whole other group of psychology saying, well, clearly now this market's going to move back down. Keep directional bias. Look at those pullbacks as blue light specials. I'm dating myself here, but those of you that remember what those were, Kmart blue light special. It's on sale. It's on sale. We've seen this before. In fact, when we were making this move lower, I think one of the things we talked about in Charts and Coffee was whether or not this had some symmetry. There was a certain balance between these two moves lower. And I think ultimately it was. So coming back to the long bias, yeah, I have long bias, but the day trade, James, it'll simply be a day trade, a fade in the morning that may last the first 20, 30, maybe 40 minutes, where the market might struggle to find some footing to the upside again after the short sellers, after that fade pushes markets lower. I love these kinds of markets. You know why? Because I want to get long. I want to get long as I kind of used a story that John's told here at Simpler and in the mentorships for many, many years. I want to get low off those garden lady lows. I want to get low off those. I'm going to get down to those lows and buy at that level, right? I want to pick up the phone, put in the order. That's the way the story goes, and go tend the garden. And that's kind of the way I look at it. I can do those comfortably after the market's sent substantially lower, usually a few standard deviations below the mean, down at our V-score lows. And so that's a day trading approach. It doesn't affect the longer term bias. You got it. You got it. All right, moving on. Adam asks, what do I think of Disney, CME, and PXD? All right. No triple question there. Disney, double green. I mean, let's always start with the bottom of the chart. All right, let's always start down in here. Double green, love that. Green grab candles, love that. Let's go through our checklist, right? Check, check, check. And what am I waiting for next? I need a pullback. I need a pullback. Whether that's going to be our El Capitan levels, right? Climbing those volume levels. Let's look to see if we can't move a little bit lower into that zone. I need a pullback. So whether it's this point of control, whether it's the zone of volume, whether it's the wave, and you notice the wave is right in there as well. I like that pullback zone. We're getting pretty close, as you can see here, to the VWAP level that is anchored for, that's our rolling 10-day. So actually, let's update that, because that should be now 26th. Yeah, right there. There you go. Because we roll that 10-day and we don't put it on a weekend. There you go. So that could be an aggro level. That could very much be an aggressive level. So we do like that. I do like that. Absolutely. All right. The next one was CME. So definitely bullish bias there for sure, Adam. Bullish bias on CME. Great names. Great names. Definitely bullish bias. 13 exponential moving average prop dots disappeared. 21 would be valid. We do have some interesting support in this area. So again, let's go back to this zone right in here, right there. It literally juts into the price action saying, hey, this is a level we could see the market gain a foothold. So if that level slips, I'll be down likely in between these two areas. That would be the next zone I would look for the market to try to gain some traction. All right, but definitely bullish, double green. Right down here, love it, love it. Two great names. Last is PXD. Now, PXD, pull that up, Pioneer. Yeah, I love this narrative. So what is Disney? Disney is a reopening narrative, of course, waiting within the XLC, which is the outperforming sector within the NASDAQ. CME tethered to the narrative within financials. It's a top 12 name, I believe, in the XLF, which has been in fuego. And then finally, we've got PXD, which is tied to the macro narrative, which is the energy, the crude oil. You know, XLE has also been very, very strong. So I love all three names. They have really good narratives in terms of macro or just straight up sector strength. And this would be no exception. Again, double green. It's always going to be a matter of where are your aggressive levels, where are your conservative levels, and where can you afford to be wrong from? I think that's really the question we always have to ask in terms of where and why we're getting long from certain levels. I would consider this aggro. I would consider this conservative. I definitely want to be a buyer. And so now I'm looking to see where we could see the market gain some traction. That's really it. That's really it. So thank you for the questions, Adam. All right. So are the jobless claims factored into the market? Yes, Mike. And frankly, I don't know that right now the market has really 1.9 trillion reasons to be happy. So I love that you're keeping an eye on that narrative, rate of change, jobless claims fall. Yeah, that's going to help. Even in the inflation in check is going to help. So, but right now the market has 1.9 trillion reasons to continue to move higher. When that fades, we'll find that the market's going to need more reassurance by way of some of this more regularly released data. So terrific. But right now it's a stimulus narrative. Yeah. Which is why all the meme stocks woke up again, right? All your meme stocks. So great point. What is at the bottom of the chart? What are the indicators? Sure. So the indicator is the bottom of the chart. This is a custom MACD. I like an MACD histogram. I've used an MACD histogram since the beginning of my career. It was one of those indicators that were built into just about every platform that I had. This is a custom indicator, which is my V-score. And at the very bottom is another custom indicator, which is a study of the 8, 13, 21, and 34. I'll always tell you what they are. I mean, this is a variation of a 12-26-9 MACD histogram. This is the standard deviation of volume weighted average price. And this is looking at the way in which the 8, 13, 21, and 34 EMAs are moving in relation to one another. So no black box. Look, nothing bugs me more than someone saying, well, this is a secret indicator and I won't tell you what it is. I'll tell you what they are. How you use them is a whole other story. I always loved in the back of Golf, I think it's Golf Digest or Golf Magazine, the very back page, who does what's in the bag? Whoever does, I'm totally forgetting who does what's in the bag, but the very last page, they'll find, a successful professional golfer who's paid to use certain clubs and they're fine-tuned clearly for them. But anyways, we want to know what's in their bag, right? As if I had Annika Sorenstam's, I love her swing. If I had her clubs, I'd play like her, right? So I can tell you everything on my chart. I can tell you what's in the bag. I think that's important, by the way. But how she swings, how she practices, how she grips, all of that is going to be really far more important than what's in the bag. So yeah, I'll always tell you guys. And I also think it's really important for you guys to know, okay, Raghee's looking at an MACD, and she's looking at a volume tool, and she's looking at some moving averages, and she's looking at the structure of those moving averages in relation to one another. And those are the things that visually give me confidence that I'm in the right type of market to execute a kind of strategy. And I won't hesitate when I see the opportunity, because I understand what these are telling me. Can you imagine being a pilot and someone saying, well, that's a proprietary gauge. We're really not going to tell you how it's calculated, but you know what I'm saying? So yeah, that's the those are the indicators at the bottom of the chart. All right, corn. I have been talking incessantly about corn. I've jumped off my copper obsession. We moved to corn. Thank you, Neil, for the question. It's CORN is the ETF, but I'm going to watch the ZC. And ZC is yellow. That is very true. That is very true. Is it my favorite commodity to be long? Do I like it more than, say, ZS? No, actually, ZS is probably going to be my next new obsession. But I do believe, Neil, that corn and beans will continue to move higher. In fact, we've even got lean hogs. We've got a corn, pork, and beans narrative. But I do believe that corn is going to move higher. And it is today. I mean, these are zones that we've been looking to get long off of, and we've gotten the opportunity. But I'll tell you what, if someone said, okay, Rog, but right now, fresh set of eyes, which market would you want to be focused on in terms of the grains and strength? Probably the soybean and soybean complex. Yeah, double grain. So I'm still looking at those pullback. We're long, Neil. Yep, we're long. All right, next up is, hey there, Matthew. How do you like the 195-minute squeeze setting up to the long side of Juniper? All right, so Juniper is, because it's moving sideways and it's more yellow, right? Yellow and what yellow am I talking about, Rob? Which yellow are you talking about? So you'll notice there's this row here, the top row, there's the bottom row. The top row is measuring the 8, 13, 21, and 34 EMAs. The bottom row is measuring the 34. The 34 is the one that we watch for the trend. So if I've got a sideways market, that is exactly what I want, ideally, to see an expansion breakout, a momentum breakout emerge from that. So I'm actually less concerned with the actual time frame, to be quite frank. I'm less concerned with the actual time frame, and I'm more interested in the structure. So if I can find a market that's compressed and it's ready to break out, yeah, I'm with you there. But everything's going to start with the environment, which is sideways, which is yellow, and that's ideal for those squeeze momentum breakouts. So while I don't have a trend follow in Juniper, we certainly don't want to be short. It's really bouncing off some key levels, as you can. I mean, look, here, let me go back to something that. So anytime you're using a price-based indicator, my wave is price-based, right? The squeeze is price-based. The MACD that I'm using is price-based. But the reason I talk about this volume here jutting out from the right edge of the chart is because that is telling us where the commitment, the conviction, the foothold is. And that's what, again, if price is Alex Henold, that's how we're climbing this wall, if you will. So notice there, and I know it's a little hard to see, but you can see that volume layer right there. Two things happen. One, there's some footing. Two, if we can get above it, it's almost like a slingshot. It's like a catapult that's going to send it higher. So I like the overall structure. And if I like the structure in the daily, then I can dial it down to a shorter term time frame and find that granular level at which we're going to run some stops and move higher. So I do like that. All right, gang. And just like that, golly, that 20 minutes flies on by. So in terms of our overall market bias, yeah, we're going to have a gap this morning. Heads up for that. I'm going to head on over to the futures room And we're going to do a little day trading. Take a look at some 1 minute time frames and see what today brings. See if we can't find some good old garden lady lows, buy them and see if the market wants to grind higher here or not after it moves lower, perhaps on a gap fade. Would love to see it. Okay, gang, as always, thanks for joining me for our charts and coffee. All right, let's get after it. Be good to each other, gang.